Hi, everybody, and welcome to the Executive Buying Weekly Market Wrap for April 13th, Thursday edition, because tomorrow we have the market closed. So let's just get right into it and see what we're looking for this particular shortened week. What we see here is that we added a company called Calivo Growers. They trade on the NASDAQ under the symbol CVGW. We added this company at $63.70, and the reason we added it was the company's CEO and chairman. His name was Cole Lessel. He actually purchased $2.6 million worth of this stock right here at $61.78. So it's right about this level here. Now, the last time that he bought shares was in the middle of March, right about this level where you see the mid 50s right here. Now, I was looking at this, and it's good to see that he's buying shares a little bit higher, which is terrific because it's always great to see him buying into strength. However, the main reason why we added this particular company to the focus list was because his purchase before this, back in 2008, was when the stock was trading at $12 a share, and within 10 months, the stock doubled in value. So we put it on at the closing price. It's in a nice uptrend, as you see. We have a projected target of $80 and a projected risk pretty tight of $58.75. I want to keep this risk tight because we have been getting stopped out of some of these companies. One of the companies this week that we had to remove from the focus list was a company, AQXP, because it's been in a really tough downtrend, and that downtrend just did not break. So this was a biotech, and it was one that we saw a successful insider buy shares of, but it couldn't break the downtrend. And at some point, we have to get out. Now, part of the reason why we're seeing such downtrends and we're getting tapped out in a couple of these is because of the overall market. Now, we're not in the Trump rally anymore. The market has had a great 4 months from November through February. However, the time has come where March was basically some sideways action, and now we're actually starting to see a little bit of a downtrend occur, not just in individual stocks, but in the overall market. So what we have to do is we have to take the temperature of the market. Price is all that matters. We know this. So if price is going lower, we're going to try and keep our stop losses a little bit tighter, maybe reduce our position sizes a little bit, not be as aggressive. There are times to get aggressive. This probably isn't one of them. Now, if you're like most people out there, you're feeling some sort of a fear. So if you look at this index, this is the fear and greed index. Right now, I feel the same way. We're at extreme fear. Now, this is a oscillator, meaning it always goes back and forth. And at times when the market's going higher, this little gauge here starts to go towards extreme greed. And at times when people are getting a little more nervous, it's going towards extreme fear. So that's kind of where we're at right now. We're getting down to people being nervous, and that may be fueling a lot of the selling. So you want to be a contrarian because contrarians make money. The old Warren Buffett, be greedy when others are fearful and fearful when others are greedy. And I get that whole thing, except people can be very scared for a very long period of time. Just like in 2008, it took almost a year to recover and start to actually bounce higher. So you don't necessarily want to look at this gauge here and say, oh, okay, it says everybody's scared, so I'm going to step in and buy. You just want to maybe keep it in mind so you don't go out there and necessarily blow out the entire IRA just because you're scared and everybody's scared. So just wanted to bring this in mind. It's always great to keep an eye on what the sentiment is doing. The other thing that I wanted to go into with this video is I wanted to try and keep it somewhat short today, was because we have a little bit of a negativity aspect to this particular week. Let's look at what is short selling. So let me just erase my previous drawings here. So in short selling, what you're doing is you're actually borrowing the item, stock, commodity that you're selling short, and you're looking to give it back to the person, company, whatever that you borrowed in the past. So for example, this is a chart of the price of gold. So let's just say hypothetically, use that color, always works. In 1980, you thought the price of gold at 2,300 bucks was too high, so you wanted to short it. Okay, So what you would do is you don't have any gold, you can't sell your own, you already sold it, but you want to make money on the way down. So you know your neighbor has gold. So let's just say hypothetically you go to your neighbor and you ask him for an ounce of gold. He says, okay, no problem. I'll give you an ounce of gold. Just make sure you pay it back to me. Fine. You owe your neighbor an ounce of gold. You take that ounce of gold and you run it right down to town and you sell it for $2,300. So you have $2,300 in your pocket and you owe your neighbor an ounce of gold. And you wait and you wait and finally you become right. As time goes on, this gold price drops just like you thought it would. And let's just say it gets down to, just to keep it simple, $1,000 an ounce. We'll go right here. So you wind up saying, you know what, I think this is good. You sold it for 2,300 and you see it at 1,000 and you go out there and you go back to the store with the 2,300 in your pocket that you had from selling it and you say, you know what, I want to buy an ounce of gold. So the store owner gives you an ounce of gold and you run to your neighbor and you say, hey Bob, thanks so much. Here's your ounce of gold back and I'll give you $100 just for lending it to me. So Bob's happy. He wasn't going to sell his gold anyway. He just made $100. And guess what? You now have $1,200 in your pocket, no gold exposure, and you made money on the decrease in price. Now, obviously, the other side could happen too. It could keep on going up and you have to cover and get squeezed, which is what they call a short squeeze. But I wanted to explain this in something that's a commodity because it allows you to get really a good mental picture if you don't know what short selling is on how it's done. Now, they do this with stocks as well. The brokerage firm is Bob, the neighbor, and the gold may not be gold. It may be shares of Tesla or, GE or whatever, the thing that you're actually selling. So what I wanted to do was just explain that to you because especially if we do run into some bearish markets or a bear market coming up here soon, not that I'm predicting that, but just as an aside, I want to make sure that you guys at least have a good understanding of what short selling is. So I hope I could expand your horizon. I'm sure many of you knew exactly what short selling was, but for those who didn't, um, it's a did you know section anyway. So I'm happy to go out there and you know just talk about it a little bit. So thanks so much. I appreciate the time. Hope you guys enjoy your long weekend, and I will talk to you again next week. Thanks so much.